Hey everybody. Hope everyone's doing okay. Good morning, everyone. Good morning. Good morning. Good morning. Good morning. I'm going to get started here in about 30 seconds. So if you can spend a little bit of time with me, I'll share with you some thoughts on some stocks. And then we'll also talk about some recent trades. And yeah, we'll just have a conversation and discuss just some things going on in the market. I want to point out some things that maybe you haven't seen or maybe haven't considered. I'm going to share a couple of stocks off my watch list that are not probably your first choice, but I wanted to share with you guys maybe some high risk reward trades, right? So I'll discuss them here in about 30 seconds. So hopefully everyone is doing okay, depending on where you're watching me. If you're on a subway in New York City, or if you're in Australia, or if you're in Cairo, wherever you are, I just hope you're safe and you're healthy. Everyone can see my screen, right? That's crazy. Okay, let's just talk about just where we are in the stock market right now. So the things that I wanted to point out, they're basically ETFs, and there's a couple ETFs here that I think are going to be interesting for the following reasons. There's quite a bit of risk reward when it comes to them, depending on if you follow along with us or not. Um, I've been looking into something called TNA for a little while, so I'm already in this, but I think a little bit more longer term. The risk reward on TNA looks quite good. If you use the moving averages, I have a really interesting cross section right here between the 5 and the 21. So that 5 and 21 cross for me when I'm on the larger time frames, 4-hour time frame, this already happened on the 4-hour time frame. This usually tells me that the short-term crowd is now overcoming the medium time frame crowd, right? So in terms of where we are for TNA, if we look at how much lower we can always go lower, right? We can always trade significantly lower than where we are. But in my opinion, if we put on a heat map here, I believe the heat map is going to tell me that there's some support back down here. All right, so there definitely is. It's between 23 to about $25. If we're just eyeballing this, which I generally don't like to do, but just quick eyeball test, between 14 all the way up to $19, in my opinion, it's just good risk reward, okay? So TNA, I would highly recommend you put on your list, just as a consideration for some further upside. So how much upside can you experience if you do look into something like TNA? Well, let's do the math. Let's just say we take an entry right here. If we get up to not even the full way all the way back up here where we were in 2021, I'm not even talking about that. If we just get up to almost 3/4 of the way here, we're looking at about a 77% gain, right? So this is just on shares alone. I'm not talking about options. So what does this mean here for a little bit more of the medium to longer time frame? If you're looking to hold on to shares, don't think that this is a bad bet at all. I really don't think that. Let's remove all the candle patterns, just remove the indicators, and just strictly look at the heat map, right? Trading back down all the way to $13. I'm not entirely sure if it's feasible or not. It's a possibility, but trading back down that low, more than likely I will be adding to my position overall. So the indication of whether it is I want to buy into this position or not is just the elevated volume that we've been experiencing. TNA is just a leveraged position of IWM. I particularly enjoy leveraged positions. I buy them in severely depressed markets. So I know that every financial advisor, if you are one, or if you ever stepped into the institutional realm, they leverage everything, even though they say they don't. Everything they do is leveraged. Everything. They're over leveraged, and they're usually scaving on very, very thin margins. It really is quite thin margins, not in terms of their bottom line, but in terms of how much leverage that they use. They can't stomach too much of a pullback, similarly to some of the pullbacks that we've seen in the market. So a lot of them needed to be liquidated, right? This is happening in the last month and a half. But as far as we're concerned as retail traders, I think that if we can stomach, right, if we can stomach still some volatility, we need to focus on that Sharpie ratio. If we can still stomach a little bit of volatility, I think that the payoff is going to be quite massive, specifically on the small caps, right? I've been bullish on the small caps for a while, despite the fact that they pulled back egregiously. I think for the longer term, when everything subsides, what's going on with current American policy, it will subside. It's not gonna, it's not gonna be like this forever. I think that on the other end of that, there is a significant amount of capital to be made on TNA. All right. So that was the first thing that I wanted to discuss. Next thing that I wanted to discuss, some of the guys in the group have heard me talk about this already. I did signal this in the past. So let's just strictly look at a chart. I like something called CLDL. Let's look at CLDL here and use the heat map here. CLDL. Okay, I actually I like this ETF quite a bit. After today, if you just want to jot this down, right back of the napkin, CLDL, in my opinion, might be a little bit of a bargain right here. So it is a daily cloud ETF. It is a leveraged ETF. Now, if you look at it, since its inception, it's down quite significantly. Last time that I signaled this, I took this at about $10, and I rode this up all the way to almost $16.50. I think that there's an opportunity to do that here. CLDL, I wouldn't mark it off your list. I think that if you give it the right time, it's a fairly good medium time frame to semi-long time frame investment for shares. I would hold on to this particular position. I would probably say a good year. Honestly, all things considered, I have a lot of my capital allocated already in different leveraged ETFs. I have TECL, I have SOXL, I have a couple of those. So my portfolio has been like this, right? It's been all over the place, but when the volatility subsides, then I'm thinking that the payoff is going to be quite substantial. So CLDL is something that I would put on your list. The next thing that I would like to discuss is going to be, I've talked about this before, and I want to bring it up because I think that there is a substantial benefit to be had here. So I talked about chat, right? For you guys that are in the Discord, if you are in the Discord, you've heard me talk about this particular ETF. So depending on where you are with your trading journey or your investment journey, if you know any history about ETFs, they haven't been around forever. They're a vehicle that were invented, that were coming up on, well, in the 90s, right? So 90, 91 was when SPY was incepted. So yeah, not that long, about 35 years. So when we're looking at SPY, if we go back, this is just a really interesting study. If we go back all the way back down to the 90s, let's do the monthly time frame. This hasn't been around forever, right? There was a beginning, there was a genesis to this. So I'm thinking that we are in the genesis of everything generative AI related. So that's why I'm looking at chat, and I called out a couple of these levels. I did take this and I was stopped out, but I'm thinking about this more long term. In my opinion, I think this trades up to over $100. I actually significantly more than $100. So I bought into other things here for the short term. Maybe I have to alleviate and do some rotation in my own portfolio. So we got back down. It looks like this wick hit back down to $28. So that is a significant pullback from its top, right? Let's see exactly how much that is. From wick to wick, from peak to trough, that's a 35% pullback, okay? It's significant. It really, really is. So where are we from the bottom, right? Where are we from this most previous bottom? We're about 20% from that bottom. In my personal opinion, again, all of this is just personal opinion. I'm just collectively sharing my thoughts. This is probably a good area to buy into this and hold it for long term. Maybe put it into your retirement account and hold on to it just like you would for any other ETF. I think that the gains here are going to substantially outweigh whatever you can get on just the regular SPY, QQQ, IWM. People, they pay $10,000 for their financial advisor for them to tell them, buy a well-allocated, low-ratioed ETF fund. People pay for that kind of stuff, which is perfectly fine. But in my opinion, this is going to outperform. That's where I'm at with this, okay? So chat, buying something like this, where we are, there was an institutional demand level at 32. There definitely was one at 30. There's no question that there was one at 30. And since its inception, 25, so we're about $10 above that. I think that this is the next ETF for us to follow for long term. All right. Next, what I'm going to bring up is something called Cider. Or sorry, not Cider. Cider. I'm thinking about networking. CIBR. Thinking about Cider notation. I don't know why I was thinking about Cider notation. All right. The next one is going to be, actually, I'm late to this one. If I got into cloud tech and got into cybersecurity a little bit earlier, maybe about 3 or 4 years ago, I would have caught on to this, right? This is an ETF very similar to what I was talking about on the generative AI one, right? So the generative AI one hasn't been around for that long. It's still quite relatively new, right? So when we're talking about relatively new technology, everyone wants to see proof of concept first. I would prefer to be allocated in something that has some traction and that there's multiple competing companies all around the world. So we definitely have that here with anything AI related, right? All the big companies are developing their own states. And I think that with the advancement of anything generative AI related, cybersecurity is going to be absolutely massive, right? So the more advanced that we get with technology, the more we need security to be at the forefront of said technology. So this already is experiencing what I was talking about on chat, literally. I mean, if you overlay the chart, we're looking into the future of what chat is going to be, literally, right? So how much did we gain since inception? So we had a pullback here, and then from this pullback to where we are now, well, let's do the peak. So in 10 years, we've gained 387%. That might not seem substantial. It might not seem substantial, but it's better than the S&P 500. I can tell you that. It's significantly better than that. So where are we with this? On the 4-hour time frame, I don't think that this would be the worst thing in the world for you to buy into. I would prefer that we pull back to 60, but $5, is it really going to matter if you're holding this for long term and you set it and forget it? No, I don't think it will. I think that ChatGPT has a better risk reward ratio overall, but I think that this would be an extremely intelligent accompaniment for that particular asset allocation. For me, I'm not so interested in SPY and QQQ. I've been more interested in cloud. I've been more interested in semiconductors. I'm hyper interested in anything ChatGPT related, or I should just say generative AI related. Anything in that space, that's where basically my entire portfolio has been. I've been allocated in semiconductors now for 4 years, and I've benefited tremendously. Despite the fact that we saw this massive pullback in semiconductors, I was out before that. But I still think that is the forefront. That is the next frontier, so to speak, for just investments overall. I know robotics is a big thing as well with Tesla. I'm not that interested in Tesla because Tesla is a one-off. I would prefer my ETFs. I am sacrificing overall explosive gains for a little bit of a smoother smoother equity curve. So that's what I'm thinking in terms of investments overall. Okay. There was one other thing that I wanted to go over. So I went over CLDL, I went over chat, I went over CIBR, and then there was one more that I wanted to discuss. QTIM. Yep. I've been talking to the guys in the Discord about this. Let's see, on the weekly time frame. This is very similar. Quantum, I don't think should be ignored. I think it's technology that we really need to be paying attention to. This you've been seeing quantum technology being discussed in the ethos and CNBC, Bloomberg, whatever news. You've been seeing it discussed, but not a lot of people understand exactly what it is and how it differs from binary states with computers. There is a significant computational gain from using quantum states as opposed to binary states. So I'm already into this. I bought this at $44 because I always have my ear to the ground every day. I'm just watching to see what new technology is coming out, yada, 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 yada. A lot of people are buying the individual RGTI and buying all these little IONQ sort of stocks. There's nothing wrong with that. I would prefer the ETF allocation because I don't want to have a heart attack intraday or throughout the weeks because the volatility is just insane. If you want a little bit of a smoother equity curve, I would highly consider something like QTIM. So When I bought this at $44, I bought this exactly here. This is literally the spot where I bought this at because I was looking at my moving averages and doing my homework, whatever. Just remember, our inception was in 2018. Cool. So had I been a little bit more, I would say, ear to the ground and not so hyper focused on just the main ETFs and just understand what's going on technologically, if I was a little bit more adversed in those kinds of technologies, I would have been in this a lot earlier. Probably going to be in this around $30, $32. So where are we at right now? It's 75. Where do I foreseeably see this? Well, if we consider and we do just a little bit of interpolation and we just take this and then superimpose it onto any other ETF that has longevity, in my opinion, we're not even in the first 10 years of this ETF. The first 10 years of the SPY and QQQ ETF, just take that, and it's just a little snapshot of what it gained in X amount of years, 30, 35 now. So if you're looking for a little bit of a smoother equity curve, in my opinion, I would say that this is a really, really good option, okay? An extremely, extremely good option. Maybe not do all eggs in one basket, despite the fact that every financial guru or every financial expert that's ever been out there, all of them have basically all of them have taken a large amount of their fortune and basically put it into 1, 2, maybe 3 bets. And that's how they accumulated their fortune. I don't necessarily believe in 100% 35 different stocks for asset allocation just for you to be safe. I don't really believe in that. I believe in big bets with good risk reward and then putting it into 3, maybe 4 things. That's exactly what I'm doing now. That's kind of the secret sauce of how it is that I got to where I am. But I think that this should definitely be one of your considerations, at least maybe not for now, but if you're thinking about holding onto things for 3 to 5 years, they keep on saying that quantum states and quantum technology is about 10 years. Well, I don't think it's 10 years in the future. I think that we're already there. If it's 10 years in the future, why are we spending $120 billion a year throughout all the companies that are investing in this particular technology? Why are we investing so much money if, it's still a long shot? So that's kind of my opinion on that. All right. Let's talk about some of the short-term opportunities. I have about another 15 minutes. I did catch the long position yesterday. Yeah, the guys in the Discord group, they got a little treat yesterday. I gave them a tool that's going to help them out for the shorter term to help them out with their day trading. It's nothing special. It's just a little. It's a moving average indicator that reacts a little bit quicker as opposed to the regular moving averages. It's just my little flair of it. I didn't invent it. I definitely didn't invent it, and I wasn't made aware of it up until recently, but I've been using it quite extensively. So let's look here for the short term. I gave you guys my my longer investment sort of things that I'm looking at. Now let's look at futures. Let's see where we're at. More than likely, I'm going to be taking 3 or 4 trades today. Yesterday, I made $1,200 yesterday, which I was excited about. I was really excited about yesterday. It was awesome. So I took 5 trades yesterday. I took this long trade right here. I'm just going to explain what trades I took, and then I'm going to explain how I took them. So I took a long trade right here, right? And then I also took a short trade. I took a long trade right here, and I got stopped out. This was a very small stop. And then I also took a short trade right here, but I got stopped out on this candle, right? So that's 3 trades right there. So stop out here, and then I also took this long trade, and I got stopped out. So my win rate was actually quite low yesterday. I won 3 trades out of 5. One of the trades was small, and then I hit on this trade right here. Okay, I hit literally from this break all the way up to here. That's exactly how it's done. Stop thinking that you don't need an 80% win rate. That's foolish. You need, the best companies in the world, their hit rates, they're not too much better than 60%. Some of us think that they have an unbelievably high, astronomically high win rate. That's not true, right? Some of the best firms in the world are doing 60, maybe 65%. But their efficiency in capital and efficiency in drawdown and Sharpe ratios and volatility ratings, right? How much they can stomach per how much gain that they're making, that one-to-one relationship is just very high. And their risk reward is very high, right? So you might have a 20% win rate, but if you have a 5-to-1 risk reward, it works out, right? You got to understand that mathematical relationship. That's all we talk about all day long. So what did I do? I just came in here, and then I'm just looking to follow the trend overall, right? So this is what we were discussing yesterday. The guys in the group now have this. Now, this is just an interpretation of the whole indicator. This is something that Shane brilliantly showed me, and then I added my own flair to it. So let me just take this one off, and let me show the one that I actually have the people in the group that they have. So what did I do? I hollowed out the candles. Why did I do that? It might seem simple, but I hollowed them out so we can focus on the actual trend. Okay, so if we focus on the trend and see exactly where support and resistance can be, I'm using the 15-minute time frame. I don't like the 10-minute time frame. If we're using the 15-minute time frame, it becomes very clear, right? There's one clear signal right here, one clear signal to the downside, and then one pretty clear signal there to the upside. So I took 2 more trades than my system would allow, right? So I could have saved myself 2 additional trades, which I didn't lose much money on. My stops yesterday, I got stopped out on a $60 trade, and I believe the other one was about $30, $35. So they were small. They were very small stops. But my ultimate gain yesterday, the last runner that I took off, I think I did it on live. It was like $540, right? And I left one runner. If I held on to the entire position, it would have been more. I would have finished the day maybe $2,200. So for me, on a daily basis, making anywhere between $300 to $500, I think that that's fantastic. You know, there's lawyers out there and doctors out there that are making twice that on a daily basis. But for someone like me, that, you know, I'm not that well educated and I don't have those kinds of degrees. I'm not an architect. I don't have anything like that. I mean, that's pretty serious money. When I had my construction business, there was days where I was making $800,000 a day doing construction. Yeah, that's awesome. But just looking at pretty little lines and making split-second decisions and holding on to positions, sometimes longer, you know, than expected, this is going to help me out quite a bit. I didn't invent this. No, I didn't invent this at all. This is not anything new. I just put a little spin on it. That's all. Just put a little spin on it. So what are we looking at for today? In terms of levels on NQ, I would like to see us back down into this range. That would be awesome. But for right now, that downtrend started at about 4 o'clock in the morning. I'm not in a trade right now. I probably will be taking trades later on today, depending on what we do. But if we're looking at pockets, I'm looking on NQ, maybe about 19,300. Let's look at QQQ because most of you are going to want a one-to-one relationship. Okay, so in terms of just pockets, I'm looking for us to trade back down into this liquidity zone as well. So around 467. If we can get down to that pocket, I'm going to wait. I'm going to just wait to see if there is a trend developing or not. And then from there, I'll look to fire on the trade. So I'll look for something very similar to what you're seeing here. I call this consolidation boxes because that's exactly what they are. If we consolidate for a little while, I'll let the candles decide what direction they want to flip. And then as soon as I get a little bit of tension and a direct flip and a slope, right? I talk about slopes a lot. This is nothing proprietary. If I get a slope and I get a breakout right here, that's where I'm going to take the position. So yesterday I did exactly that. Literally what I'm showing you is what I did. I took that breakout candle right here and then I rode it until I was tagged on this wick. So I was tagged on that wick. I got this red candle that came in. I was already up 210 points. That's it. 210 point move. I mean, you can't really get much better than that intraday. All right. So trading back down into the zone or anywhere near it is what I'm looking for here for the short term on QQQ. On SPY, is anyone even here? I don't even know if anyone's on. Probably talking to like 2 people right now. Okay. Same thing here on SPY. If SPY does trade back down into this pocket, let's look at the 30-minute time frame. Probably a little bit better, a little bit cleaner. On the 30-minute time frame, if we do trade back down into this pocket, I would be interested, very interested in looking for a position long, okay? We have tech earnings this week. I didn't neglect to mention it. I just was waiting for the opportunity to. So on tech earnings, Google earnings was favorable. Tesla earnings was horrific. I don't want to be trading Tesla is okay, but I really don't want to be investing in Tesla at all. I'm so sorry, but I don't agree with the numbers. I just don't agree with them. If tech earnings does blow over, we have an opportunity for a pullback on the larger time frames here on SPY and also QQQ. So that box that I just drew out, this is going to be the short-term support. If we start breaking even lower, this is the area that I'm going to be watching. So some of you guys that are trading smart money concepts, or you're just doing fair value gaps or anything liquidity based, you're looking for gaps to be filled down here, right? Because we didn't spend a large amount of time here, right? This was literally a bull flag. So this bull flag played out beautifully, perfectly. If we do trade back down into that area, this is the zone that I'm watching for further continuation to the upside, provided that earnings on tech goes well. All right, that's what I'm going to be watching here for the week. Okay, that's all I have. I'm going to let the next 5, maybe 6 minutes open for you guys to get some questions in. If you have any questions, comments, concerns, criticisms, donations, if you have anything that you want to get off your chest or ask me, please do. I'm going to go through the comment section now. If you found today's information helpful, just give me a thumbs up. If you didn't, give me a thumbs down so we get some feedback. I'm very open about feedback. I'm very, very transparent about everything that I do and all the things that I share. So if there's anything that you want to know or have any feedback to give, please feel free to do so, okay? What do we got, everyone? What do you guys want to know? Does anyone want to ask me about NVIDIA today? Okay, cool. I don't think we have any questions. This is a proprietary indicator. So this is something that I built. So this is something just available to members. If you join the High Strike community, you will have access to it. This is nothing too fancy. It's just a whole indicator. If you go, I'm going to share with you the free version. Just go right here. Just type in whole. If you go into this one right here is very good, right? There's 15,000 people that use this script. It's the same thing. It's the same exact thing. So if you're interested without having to join the Discord community, no problem. No problem at all. Just use the whole indicator and then you can put that on your chart. The only difference with mine is the visual difference, and there's more filtering in mine. Mine is something that I built. But this whole indicator that you get on TradingView is maybe a little bit different. It is a little tiny bit different than mine. Mine goes through a filtering mechanism, but yeah, that's it. It's nothing. There's nothing magic. There's no such thing as a magical indicator. It doesn't exist. Indicators are all, that's exactly what they are. They're scripts, they're indicators. They do real-time calculations for you to decide whether you want to take a long or a short position, right? That's all that is. An indicator is only 40% of the trading strategy, right? You identify your entries, but what about your exits, your trade management, your wrapper, your strategy wrapper around everything that you're doing? All those things matter as well. So that whole indicator, all you got to do is go into TradingView and type in whole, right? HMA, it's very simple. And you guys can have access to something that is almost identical to what I'm using. So the thing that I'm using, I gave to the members yesterday. I think just visually, it's a little bit simpler and cleaner to see where the entries and exits are, in my opinion, right? In my opinion, you might not share that opinion, which is fine. But for me, I can very clearly see where the trend starts and where it ends and where I need to take my entry and where I need to take my exit. Like right now, I'm getting a really, really good sense of a short position coming in. Probably want to take the short. Maybe I will take the short. Maybe I shouldn't do this on live, but that's looking good. Give me a second. I missed this entry. Actually, the short started here, so this would be me chasing the trade. Do you see? So I like that on the 15-minute time frame. Yeah, I kind of feel silly well, I had to wake up at 4 o'clock in the morning to start catching that run. So I had 3 opportunities here for this entry. I'm going to be talking about this later in the Discord. I had an opportunity here. I had an opportunity on that candle. And right now, for what the whole indicator is telling me, it's telling me, well, Sage, you're a little bit late to this move. Despite this candle being aggressive here to the downside, I think something just came out. I have to turn on the TV. Despite this being a ridiculously strong candle to the downside, I want to give context of what is the overall trend on the time frame that I'm using. Do you see what I'm trying to say? So how much of this move have I missed so far? I don't want to miss. I want to miss as low amount of the move as possible. So if I've already missed about 130 points. I'm not going to wake up at 4 o'clock in the morning to trade. I wake up at 5:30, 6 o'clock. I'm not going to be doing that. So on the 30-minute time frame, do you see what I'm trying to say? This overall trend started at 5 o'clock in the morning. So what I was talking about, this actually falls quite nicely into what I was discussing. I'm waiting for around here for this to start changing once again, and then seeing if I can grab some of that price action. All right. Let's go over NVIDIA. Hopefully I answered your question. I know that I'm very verbose. I have a tendency, sometimes you guys ask me a 3-word question and I explain it for 10 minutes. It's just my personality. I really like to explain things very thoroughly. Okay, on NVIDIA, what am I looking at here for the 2-hour time frame? Probably looking at NVIDIA breaking above this threshold here at 111. Let me look at the 4-hour. Yeah, more than likely I'm looking at NVIDIA breaking above this threshold. The next level to gap up at would be 120 in my opinion, but I'm not that interested in NVIDIA at the moment. If I'm going to take NVIDIA, it's going to be between 95 to $97. I would prefer to wait for that, okay? I would definitely prefer to wait for that. In terms of where we are now, buy in, don't buy in, take a long, take a short, neither, right? Let's look at the 15-minute time frame. On the 15-minute time frame, do you have an opportunity to scalp? Yeah, you do. I would prefer that we trade back down to 106 before I consider taking any scalp positions, okay? Does anyone have any additional questions? I'm about ready to get off here. Okay, let's call it a day, guys. I really appreciate everyone. Look for me in the Discord if you do decide to do a 1-week trial, or if you have any questions, you can DM us directly here on Instagram or on YouTube as well. So you guys seen what I've been working on, and that's it. Thank you so much, guys. Have a wonderful day. Okay.